Hi, good afternoon. Welcome to the marketplace. Coming up, Social Security and National Insurance Trust (SNIT) increases monthly pension payments by an average of 12%, as the highest contributor on the scheme is now getting more than $200,000 every month. Also coming up, price of LPG expected to increase by some 3% per kilogram beginning today as distributors respond to developments on the international market. Plus, government targets 2 separate debt payments to investors in first quarter of this year after settling $346 million to Eurobond holders last Friday. My name is Darryl Kwal. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. First up, the State Pension Trust (SNIT) has increased the average monthly payment to contributors by some 12%. The move is in line with the pension indexation review by the trust. Here's more in this report.
Based on this move by the State Pension Trust, the monthly payments to pensioners starting from ending this month should go up by some 12%. According to the Social Security and National Insurance Trust, this will be made up of some 8% review, plus the flat amount of 72 Ghana cedis with a balance of 4% that is to be redistributed. According to the State Pension Trust, the indexation is a mechanism used to cushion low-earning pensioners in line with the principles of Social Security. It adds that, as a result of this pension review, effective increments should be pegged between 32.19% at the bottom end and 8.04% at the top end. The action by SNIT will ensure that if one is earning some 300 cedis, that person will be getting 95 cedis more. However, anyone with a monthly payment of 1,776 Ghana cedis will also be getting 1,999 Ghana cedis. But when it comes to the highest person on the scheme, following the 8% review, that the person will now be earning 201,792 Ghana cedis every month. The State Pension Trust in the statement released today also promised to continue reviewing the rate in line with development in the economy.
All right, we're following developments in the fuel market. The price of LPG is expected to go up by some 3% per kilogram beginning today. This has been influenced by rising prices of the product on the international market. I'm joined on Zoom by Vice Chairman of the LPG Marketing Companies Association, Gabriel Kumi. Good afternoon to you. Happy New Year. Thanks for joining us here on the marketplace. So we understand external developments are informing these expected adjustments. What's happening on the international market?
Happy New Year, Darryl, and Happy New Year to your viewers. A careful look at the prices of the international markets reveals that the price has started going up. Over the last 2 weeks, it has gone up by about 3%. We have also enjoyed some stability in the exchange rate. But that has also seen a slight increase over the past 2 weeks. The cedi has depreciated by about some 1%. And you know, anytime the cedi depreciates and international price also see an upsurge, then you are likely to see an increase in the price of the local market of LPG. So that is exactly what is happening. Unfortunately, crude oil price has also started picking up a little bit. We are hoping that it doesn't go too high. It stabilizes around the $74, $75 per barrel. If that happens, then we are able to also stabilize our cedi, and we are likely to see a relatively very stable price of LPG on the market going forward.
Yeah, our reporting this afternoon says prices could go up by as much as 3% per kilogram. Is that the indication you're getting? How significantly are prices going to go up?
Yes, we are looking at between 2 to 3%. If we are lucky and our suppliers, the BDCs, are magnanimous enough and take off that expected percentage increase and give that to us as our New Year bonus, then we are going to see a very stable price. But if they decide to pass on the increase to us, we also have no other option than to pass it on to our cherished consumers. So it depends on how the BDCs also react to the upsurge in the price of the finished products that we are seeing on the market. But even when you also check for the price of the next window beginning 16, the indications are already out and it's also showing a positive sign. So we are likely to see some increase in the price of LPG going forward. We are hoping that the incoming administration will work quickly to stabilize the cedi. The international price of the product, we have very little control. But if the cedi is able to stabilize and even appreciate against the dollar, that will knock off any potential negative effect that international price of the product is likely to have on the product locally.
Well, speak of the incoming government. I mean, tomorrow is inauguration day, but the problems are still the same, right? We want to make LPG affordable. You have raised concerns about taxes. The president-elect has talked about reviewing some of the taxes. And so what would be your expectation?
Okay, we are quite surprised that the president did not mention the LPG, removing taxes on the LPG as one of his major tax relief that he's going to give to Ghanaians. But we believe it's never too late. Prior to the election, we met the NDC team. We submitted a paper to them, and we make a case for complete removal of all taxes on LPG. We still stand strongly by that, because we believe it doesn't make any sense to put even a single peswa on tax on LPG. It doesn't make sense. The benefits that we are likely to enjoy by increasing the consumption of LPG is far more outweigh the benefit we are gaining from these taxes. So we will, before His Excellency the President even touches the sword and sit on the presidential chair, we are already appealing to him that he should not forget LPG when he sits properly in the chair and starts looking at the taxes that he's going to cancel. It's not something, we will not forgive him if he doesn't remove taxes from LPG.
All right, Vice Chairman, LPG Marketing Companies Association, Gabriel Kumi, thank you so much for joining us on The Marketplace. I appreciate your time. Well, in his final State of the Nation address, President Akufo-Addo announced a strong economic recovery with a 7.2% GDP growth in the third quarter of 2024 and nearly $8 billion in gross international reserves, dismissing claims that Ghana is facing financial distress. Here's more in this report.
In his final State of the Nation address, delivered ahead of the dissolution of the 8th Parliament, President Nana Addo Dankwa Akufo-Addo reflected on his 8-year tenure, highlighting significant achievements, challenges, and his vision for Ghana's future. President Akufo-Addo declared that the economy has recovered strongly and faster than projected, citing a GDP growth rate of 7.2% in the third quarter of 2024. He also refuted claims that the country is broke, stating that he is handing over the nation with a gross international reserves of nearly $8 billion. According to him, This is an improvement from the $6.2 billion in gross international reserves he inherited in 2017. Meanwhile, speaking on the Probe show with MFR Apau, the spokesperson of the presidential transition team, Felix Kwakye Ofosu, debunked that assertion.
Jargons. When the president speaks about gross international reserves, he's simply talking about monies that are incumbent, monies that are only passing through the accounts because they will be used for specific payments. If you look at the net international reserves, that is where you can tell whether any money has been left. And I can tell you that that position is dire. Okay. As we speak, there are significant obligations that confronts the government of Ghana in the first few months of this year. For instance, I think by last week Tuesday, the 2nd of January, if I'm not mistaken, that would be Wednesday or Thursday, I believe. Government of Ghana was due to pay $364 million in debt servicing because the debt restructuring that was done pushed debt servicing to the beginning of 2025. Okay. So just this week, we have had to pay $364 million. That will affect our reserves position. In February, at the end of February, we are also due to pay another 6.1 billion Ghana cedis in interest payment or debt servicing, if you like. And we do not have the money. Government has had to borrow in order to be able to fulfill that commitment. So when the president tells you that he is leaving any money, that is not the case. We know that the situation is bad. Indeed, the reason why we campaigned so vigorously to end the mandate of the people of Ghana was to stem the economic decline and let nobody be in any doubt about the parlous state of our economy, about the way that it has been run down.
Felix Kwakye Ofosu emphasized the significant debt burden in the energy sector that awaits the incoming government.
There is about 2.5 billion Ghana cedis of debt in the energy sector alone. That runs into close to 30 billion Ghana cedis.
But we were told these debts were being cleared, at least.
No such debt has been cleared. Okay. Indeed, ESLA must have accrued 40 billion Ghana cedis by now. But we still owe 2.5 billion Ghana cedis to various players in the energy sector. There are serious problems in the energy sector. The Gensa matter is one that leaves a debt overhang of about $2 billion around our neck. So if anybody tells you that this economy is in good shape, he's not being truthful.
Ghana remains in debt distress, with the IMF stating that the debt is unsustainable and stands unchanged since the debt sustainability analysis published in 2024. The governor of the Bank of Ghana, Dr. Ernest Addison, projects that the inflation rate will decrease to 15% by the end of 2025, down from the current 23%. However, he noted that this forecast depends on the economic programs and policies to be implemented by the incoming John Mahama government.
Now, the government will now be targeting to clear 2 debt payments to investors for the first quarter of this year after clearing some $346 million Eurobond holders in coupon payments last Friday. Here's George Jaffe with more.
Swift advice document seen by Joy Business confirmed that government has made the necessary payments to these Eurobond holders, as announced by President Akufo-Addo during his State of the Nation address. This is the second payment made by this administration after a similar one in October last year, totaling $520 million. There are 2 separate payments that should be made in the first 3 months of this year. However, Joy Business understands that these will be coupon payments targeted at domestic bondholders. Some 6 billion cedis should be made on February 21, 2025, and another one totaling 6 billion cedis, which is due in March this year. This should sum up to some 13 billion Ghana cedis for the first quarter of this year when it comes to these payments. The Finance Minister, Dr. Mohamed Amin Adam, has also disclosed the necessary funds have been set aside through the sinking fund to deal with these commitments. The 2025 mini-budget has shown that government will be setting aside some 20 billion Ghana cedis as total interest payments for the first quarter of this year.
You're watching The Marketplace. Taking a quick break. We'll be right back. And thanks for staying with us here on The Marketplace. Let's turn to the financial markets. Government achieved a 24% oversubscription of Treasury bills. However, it came at the expense of rising interest rates, increasing the cost of repaying the short-term instruments. Head of Trading at Republic Securities, Patrick Edemagama, joins me on Zoom to discuss this. Happy New Year to you, Patrick. So what more do we need to know about last Friday's auction?
Happy New Year and to you and the team. On the money market last week, we noticed that the government saw a significant oversubscription. That's about 24.65%, raising a total of 5.4 billion, accepting and allotting majority of the bids against a target of 4.3 billion. In this, we saw the 91-day clearing at 28.19%, increasing by 15 basis points. We saw the 182-day closing at 29.92%, going up by 23 basis points, and the 364-day closing at 30.15%.
All right, and while interest rates continue to rise, and throughout this year, we expect interest rates to continue to rise as well. What are you reading and what are the implications?
Well, what we are seeing at this stage is that there has been increased level of confidence in the market, and that means that people are willing to give more money to government. And in this case, if the checks are working well, then the government should be able to also collect more money. And when that happens, we expect interest rate to remain stable at the high stage we see them now. But what the market would prefer is for interest rate to actually ease downwards to aid the economy better.
Well, tomorrow is inauguration day where we expect a transition of power. A new government is going to be in place. Do investors react to these things? How do you expect that to impact the markets?
Well, investors are watching a lot. We saw the spike in the confidence level after the election, directly after the election. So definitely there's going to be another spike after the inauguration. But what investors are also looking at is the first 100 days to see how the policies will play out and how this will also help in revenue generation. We know the options are really slim for the government, but if they are taking away some taxes and all that, we know there'll be heavy reliance on the treasury bill or the money market. And when that happens, you need to entice investors to be able to buy in or give you money, and that will all only mean that there will be increase in rates and the bubble will continue.
Yeah, I mean, earlier, there was this report where a spokesperson for the presidential transition team said, was talking about the debt situation, made the point about this new government having to continue to borrow to meet some of the commitments. Do you think they'll be looking so much at the treasury market?
Unfortunately, they don't have much options on the table. That's the only market investors currently have confidence in. If you look at it, the domestic market, if you look at the bonds, they cannot approach bonds in the domestic market because that will not actually favor them. If you look at even the external market, now that they are building confidence, paying the coupons and all that to be able to build confidence in that market as well. So the options available to government is really slim, and how best they use this option is another thing we have to look into.
All right, on the stock market, share price of Fan Milk PLC expected to decline according to some analysts. What are you watching this week?
Well, after a successful 2024, we've seen that there's been a lot of interest in the market. We've seen stocks like Unilever reaching 140% in terms of year-to-date, closing the year 2024. And a lot of interest has come onto the market. People are beginning to pick up positions. What we see is that some stocks like Farm Milk, as you mentioned, are heavy on the sell side. So we expect their prices to drop. Others are also heavy on the buy side. But analysts are gradually looking at also the banking stocks, where we know this market is mostly moved by banking stocks. And this year is likely some of them will start preparing towards payment of dividends. So we expect that to also propel the market to another height.
Does this year look positive for the stock market?
Yes. It really looks positive because last year was driven by non-banking stocks. If banking stocks are really trading as they used to trade, we should expect this year to also close in a very positive, high stage.
All right. Head of Trade and Republic Securities, Patrick Edem Agama, thank you so much for your time this afternoon. On the marketplace, the Bank of Ghana is projecting inflation to slow down significantly in the coming months to hit the much talked about single-digit target by the first quarter of next year. Now, this is based on work done by the central bank over the past months to deal with excess liquidity, rising food prices, and the depreciation of the cedi. Dr. Ernest Addison is governor of the central bank.
George, we have made a lot of progress from where we are coming from, given where the rate of inflation went. This year, we were expecting to make as much progress, getting inflation to 15% by the end of the year. We have had to revise that objective to around 18%, 18 plus or minus 2%. And now it looks like we are looking at landing on the outer bands, right? And I'm telling you that the reason why we have not stayed at the central point in 2024 are the special factors that are associated with an election year, including the fact that the currency depreciated at a faster rate than expected in the first half of this year. All of those reasons account for why we are around 23 instead of 18. Now, going forward, we are forecasting that we would see faster disinflation, meaning that maybe from 23, we should expect to reach 15. But this will be predicated on the policies that will be implemented in 2025. That's the point that I'm making.
Single digit, would that be possible?
Single digit is possible. We had single digit in this country in 2019, 2018, 2019. It was short-lived because we know what happened after 2019. It was short-lived. We had, by the time we got into 2020, the coronavirus issue had come in. This all of a sudden got unhinged, and all the gains that we had made between 2017 and 2019 were sort of reversed with that impact of the pandemic.
Well, we are a few hours to inauguration day. The 8th Parliament actually is going to be dissolved today, making way for the 9th Parliament. Now, when a new government assumes office, that is when President-elect John Mahama takes office, he's planned to remove some taxes. Well, First Solutions has been reacting to this, saying it may not be a good idea. Listen to Associate Director at First Solutions, Mike Kuniga.
John Mahama has indicated that he might renegotiate the terms of Ghana's IMF program and that he wants to remove certain taxes implemented by the current NPP administration, including the tax on electronic payments, the e-levy. While he will probably cut these taxes, the ones he seeks to target represent a very small portion of Ghana's total public revenues, accounting for less than 3%. Therefore, we view the removal of these taxes as largely symbolic, largely political, rather than having a significant impact on Ghana's fiscal standing.
Well, before we go, a quick update on the commodity market. We have been checking the price of cocoa. If you've been monitoring yourself, gone past $11,000 a ton. Joining me in studio, my colleague Winston Taki, who has been following this story for quite a while. A new government, of course, is going to have to handle this as well. As the prices go up, we think it would be good for the economy, but that's not really the case because production actually is not that good at this point. And so just tell us, Winston, what's at stake right now?
Currently, the cocoa price is selling around $11,354 on the global London market, and it appears it's going to be going higher. Currently, Côte d'Ivoire is not quite optimistic about the trend of rainfall pattern that is currently affecting their output going into this coming season. And also there is the prospect of whether Ghana will be able to meet the 350,000 metric tons target set for the 2025-2026 planting season. But the incoming government will have to restructure possibly the overall cocoa sector, considering the fact that we've been always operating based on debt over the years.
What would restructuring entail? I mean, they don't have power over the weather. I mean, that was one of the main reasons we were given last year, wasn't it? There was a issue with the weather, it couldn't be controlled, it affected production. What else do they need to fix?
First of all, the monetary aspect of the sector needs to be refixed, because it got to a point where cocoa farmers were not quite optimistic about the pump prices. Possibly, I mean, the spot prices that the government was given, and they were kind of hoping that the prices will kind of benefit them, considering the rate at which the price is happening now on the international market, because this has opened the leeway for people to see smuggling as more profitable compared to selling to the government. However, we are hoping that the challenges that have bedeviled the sector more prominently has to do with disease and also the unfair weather condition, which is one key issue. And currently also we've seen China also getting into the market. The key issue that also the international market is not quite open to is now research has shown lead estimates or indices or elements being found in Ghana's cocoa, especially on the European market. So this goes against our whole prospect going into the next season.
We saw the producer price go up, yes, right? Isn't that also enough to encourage the farmers? They complain about it, they say it's not enough.
The sector has its buoyant season, and this is the best time for the sector. If government needs to increase revenue or seek more foreign reserves, cocoa sector should be the key target. We've seen the key challenge that has to do with deforestation issues. We've seen galamsey operations hindering the cocoa sector. People are now giving out their cocoa farms for galamsey operations. The government start dealing with those sectors, I'm sure that would turn things around for them.
All right. Thank you, Winston Taki. More news on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We have that big story on Smith there. You can read more about it on myjoyonline.com/business. Goodbye.